Welcome to the Q4FY20 earnings conference call of Aavas Financiers Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sushil Kumar Agarwal, MD and CEO, Aavas Financiers Limited. Thank you, and over to you, sir.
Good afternoon, everybody. Thank you for participating on the earnings call to discuss the performance of our company, Aavas Financiers, for Q4 and FY20. With me, I have Mr. Ghanshyam Rawat, CFO, Mr. S. Ramnaresh, Chief Business Officer, Mr. Ashutosh Atre, Chief Risk Officer, Himanshu Agrawal, Investor Relationship Officer, and other senior member of the management team and Strategic Growth Advisor or Investor Relationship Advisor. The results and the presentations are available on the stock exchange as well as our company website. And I hope everybody has had a chance to look at it. I am happy to inform you that company is consistent in delivery of its operating metrics with AUM growth of 31%, PAT growth of 41% year-on-year for the full year basis. The profit as per IGAAP accounting registered a year-on-year growth of 55% for the quarter and 56% for the full year. Gross NPA is 0.46% and return on asset is 3.75%. As you all know, following the COVID-19 pandemic outbreak, the various state governments had started announcing partial lockdown in their states by around mid-March, and this was followed by announcement of 1 day's full nationwide lockdown by Honorable Prime Minister on 24th March. So subsequently, on 27th March, RBI allowed the lending institutions, bank, NBFC, HFC, MFI, to offer a moratorium of 3 months to their borrowers with effect from 1st March. As per a policy approved by the board, in response to this, we took the following steps. Business continuity plan was swiftly implemented to make sure that employees can work from home, and around 150 BCP centers were live, ensuring that critical business operations and essential customer services were not hampered during the lockdown one. We were operating around 60% branches during lockdown 2 and have been operating around 80% of the branches during lockdown 3. Liquidity was the need of the hour, as in the past we continue to maintain a strong liquidity position of rupees 2,532 crore rupees as of 31st March. Out of which 1,484 crore rupees is of cash and cash equivalent and 148 crore rupees of unavailed documented sanctions. Moratorium policy was quickly formulated and approved by the board. We reached out to all our existing customers to educate them about the policy in clear terms. The customers were made aware that they can opt to avail the moratorium policy and not pay their EMI in case their cash flow are being adversely impacted due to lockdown. At the same time, we made sure the customer understood that this is only a temporary deferment and not a waiver. That interest will continue to accrue during the period, and this will result in an increase of EMI amount or loan tenure once the period gets over. But in this period, we were able to cover 100% of our customer base, which is 1 lakh plus customers. Now coming to separate quantitative impact of lockdown and moratorium. Collection efficiency, which tends to be 99% plus in normal situation, was 95.2% in March, and after excluding moratorium accounts, it was 102.4%. For the month of April, collection efficiency is 76.3%, but we have spoken to all the customers, and based on our interaction, we are confident that this will further improve by end of May, as lot of them are willing to pay once the lockdown opens up. In steady state, not considering the impact of moratorium and asset classification freeze, as of 31st March, our 1+ DPD and GNPA number would be 7.01% and 0.58% respectively, as against the reported number of 2.43% for one-day past due number and 0.46% for the GNPA number. This is without considering the additional collection that would have happened during the last 10 days of March if not for the lockdown. Additional ECL provisioning of rupees 44.37 million created to consider the impact of COVID-19. To mitigate the impact of economic slowdown on our profitability metrics, we are deferring the discretionary expenses till business returns to normalcy and are in process of rationalizing the fixed salaries for the next few months. And in our business model, most of our expenses are disbursement linked. So accordingly, we will be able to have better control on our operating expenses during this period. An interesting aspect of current economic situation is that some of the customers are opting for part payment as return on fixed deposits are quite low. So high ticket customers are coming for a part payment, and this is a unique situation which we are seeing in our portfolio. In the Indian context, now roti kapda or makan will be priority for millennials who are moving away from owning a house to renting a house. So we are seeing that in the near future, housing demand for affordable side will be increased and it will be consistent from near to mid-term period. I would now hand over the line to Ghanshyamji, CFO, to discuss various business parameters in detail.
Thank you, Sushilji. Good afternoon, everyone, and a warm welcome for earnings call. In the quarter, the company borrowed an incremental amount of rupees 11,794 million at 8.12% for 120 months. I am happy to share that Asian Development Bank, a prestigious development financial institution, invested a rupees 4,444 million through NCD in the month of March, despite the heightened risk awareness during that period. As of March 20, our average cost of borrowing stood at 8.44% on an outstanding amount of rupees 69,530 million with an average maturity of 134 months. Our long-term credit rating continues to be AA- from CARE and A+ from ICRA. Despite the highest short-term rating of A1+, we continue to maintain zero exposure to commercial papers as a prudent borrowing practice. IGAAP to India's reconciliation has been explained in detail for PAT as well as net worth on the slide number 33 and 35 of our presentation. Now I take further more key parameters. As of 31st March 20, total number of live accounts stood at 1,04,700, 35% year-on-year growth. Total number of branches was 250, 40 new branches added in last 12 months. Employee count 3,564. Assets under management grew 31% year-on-year to rupees 77,961 million as at March 31st, 2020. Product-wise breakup. Home loan 73.5%, other mortgage loan 26.5%, occupational-wise breakup, salaried 35%, self-employed 65%. There is no major change, significant change in our product and as well as occupation. Disbursement increased by 10% year-on-year to rupees 29,304 million for the year FY20. but the total prepayment during the year were 3,150, lower than our last few year trend. Spread were maintained above 5% at 5.19% as on March 31st, 2020. Average borrowing cost of 8.44% against our average portfolio yield of 13.63%. Borrowings. We access to diversified and cost-effective long-term borrowing. A strong relationship with the development financial institutions like ADB, IFC, World Bank, CDC. 42.7% from term loan, 24.9% from assignment and securitization, 13.7% from NHB, 18.4% to debt capital market. We have overall borrowing structure. Assets quality. 1 day past due stood at 2.43%. Gross NPA stood at 0.46%. Net NPA stood at 0.34% as on March 31st, 2020. We are constantly in touch with our customers and doing a daily monitoring of collections and assets quality. Product by GNPA, home loan 0.52%, other mortgage loan 0.27%. Liquidity as on March 31st, 2020, we have of rupees 14,840 rupees as a million, unavailed CC limit of rupees 1,180 million, documented and unavailed sanction limit from NHB is 6,000 rupees million, documented unavailed sanction from other banks is 3,300 million. Against this liquidity of rupees 25,320 million, the debt repayment is rupees only 2,814 million over next 2 quarters. Profitability, PAT registered a 41% growth to rupees 2,491 million for FY20 as per India's accounting. As per IGAAP, PAT registered a year-on-year growth of 55% for Q4 and 56% for the full year. ROA 3.75% and ROE 12.66% for FY20. We endeavor to maintain ROA 2.5% and above. As on March 31, 2020, we are very well capitalized with a net worth of rupees 20,979 million. Our book value per share stood at 267.9 rupees. Now with this, I open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, you may press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bhagat Shah from ASK Investment Managers. Please go ahead.
Hi, it's Bhagat Shah, not Bhagat Shah. Good afternoon, Sushil ji. Very decent performance in very tight situation. Just one question. While asset growth has been healthy, and the interest income growth also has been very healthy in sync with that. Why is, despite excess equity that we carry on the books, cost of interest is outstripping the growth of the asset book?
Mr. Bhatt, we missed your last few sentences. Could you please repeat?
Yeah, I'm saying while asset growth has been healthy and the interest income, the yield has been, interest income has been growing at a healthy pace. Despite the fact that we carry excess amount of equity on the books because our net worth compared to borrowings is much larger. And yet, surprisingly, interest cost expense continues to grow at a rate higher than any of these. So I'm a bit surprised by that, why interest cost is rising at a faster pace despite high equity on the books.
You see, both has a different base number. That's why in percentage terms, it looks differently. If you will appreciate this thing in our industry, major raw material is a funding. Whatever we borrow as well as we deploy the same amount of fund in the asset side. If you see my incremental interest income and incremental finance cost, it's around just 50% my incremental interest cost. And secondly, I want to highlight one thing. I think after September 18, when liquidity tightness, few NBFC and HFC has faced a lot of trouble in the market, board and as well as ALCO decided to keep some higher buffer of cash liquidity in the company to meet any sort of eventuality. So our cash buffer we are keeping around 1,000 crore and above. So that's also additional cost on the balance sheet for a temporary period. That will go deployed in the business. So obviously that will have a higher impact on the interest income side. But in overall CO spread level, we at overall how my yield is moving, how my cost of borrowing is moving, we have improved our spread. We first time have touched our spread after 4 quarters, 5.19% our overall spread.
So relatively higher looking interest cost compared to interest income is mainly the function of excess liquidity.
Yeah, mainly function of liquidity as well as
leverage.
Increasing leverage also. If you see when we go for IPO, we were just having a 4,000 crore of the balance sheet. Today we have almost 8,000 crore of total balance sheet size. So incremental growth is also coming entirely from funded by the liability now.
So, thank you. Thank you, sir.
Thank you, sir. Thank you.
Thank you. The next question from the line of Abhijit Tibrewal from ICICI Securities. Please go ahead.
Yes, sir. Thanks for taking my question and congratulations on a great set of results, even when practically the last 10 days of the quarter were washed out. I just had a couple of questions. So your other mortgages book, or so as to say your LAP book, has seen a sharp improvement in asset quality. Though it was deteriorated in the first 9 months of the year, what we reported yesterday shows that the asset quality in your LAP book is now largely flat year over year. Did you take some write-offs there?
No, Abhijit, there is no write-offs. There were 5-6 cases only, as we told in the last investor call also, and we told that we are hopeful recovering those in the last quarter. So we have recovered money out of these accounts, and 2-3 accounts got foreclosed also. So it's a normal routine. We have not taken any write-offs there.
Great, sir. That's really heartening to hear. So what would be your proportion of loan book in your branches in the current green, amber and red zones?
So, Abhijit, I don't have the data that way, but right now we are operating 82% of our branches in lockdown 3, and in lockdown 2 we were operating with 62% branches opening. So accordingly, you can say that around 82% branches are in orange and green zone, and 18% of the branches are in red zone.
Okay. And sir, I mean, in your opening comments, you said that the collection efficiency stood at 76.3% in April. So I mean, with that, is it fair to conclude that the remaining, say, 24% is in moratorium?
Abhijit, as per board approved policy, we have given the time the customer till 31st May. As I have told, we were able to talk 100% of our customer base during this period. So we have already collected 76.3% customer, and as per customers' comment, we are hopeful that this amount will further increase in terms of collection efficiency, because a significant amount of customers told us that once the lockdown is opened up, they are ready to pay the money. So I think this number will further improve by end of 31st May.
Okay. So, sir, I mean, at least I was thinking that people had money or savings from the month of March and they paid up in April. And I was actually thinking that this collection efficiency number could likely taper off in the months of May and June. While our expectation is the collection efficiency could actually improve in the month of May. I mean, fair to say that?
Abhijit, I will tell you from our experience, our first representation data of the EMI, May month is better than the April month.
Okay.
Because we were able to talk to 100% of the customers. So the customer who has paid the April month installment were automatically has readiness to pay for the May month installment because they have understood the moratorium policy.
Okay, great. And sir, one last question. This COVID provisioning that we did of rupees 44.4 million, I just wanted to understand what are the scenarios that you would have considered. Basically, the science behind this provisioning, this COVID provisioning number of 44 million.
Yeah.
Sanjamji, CFO will reply this question.
Yeah, thanks, Abhijit. I think since the lockdown happened, I think we are greatly engaged with the EY and their expert team. They are our auditors. And accordingly, we framed our policy and processes for that assessment of COVID impact. It goes in the two ways. First, assessment of poverty of default. In that, we have classified our entire portfolio based on the profile. Major cut was salaried and self-employed. Then each category, we have a further categorization of the entire portfolio in the various segments. Accordingly, then we given them a weight of a high, low and medium risk categorization we've done in the entire portfolio because since beginning we always mention this thing as Aavas, we maintain humongous data of each and every customer.
Even in self-employed.
Yeah. So even in self-employed.
Given that the situation itself is very, very dynamic, I mean, we will keep evaluating it and we will keep providing for it in the coming quarters as well.
Yeah, definitely. We will every quarter we will evaluate things maybe on improvement side, things maybe go on a further opposite what we have thought process, but every quarter we will evaluate and we will provide accordingly.
And Abhijit, the kind of data and categorization we have made, even auditors and audit committee were appreciative of that. And our analytics team, which were running helping us since last 4 years. So all this put together, so like we always tell that even in S&P category, we have 50 customers categorization. And so 50 customers categorization, then FY cut, then LTV cut, then high risk and medium, then impact taking, then LGD, then PD, then over and above 25% management overlay. So we have done the entire system very scientifically, thoroughly detailed. We have checked it from auditor, then their expert committee, internationally, nationally. Then we did a stress testing on the entire portfolio, and cumulatively then we have came to this amount. So, and as ICI guideline also issued, we need to take a lifetime COVID impact also, next 12 months COVID impact also. So we have factored in all the guidelines, all parameters, internationally, nationally, audit committee, auditors, data analytics, and then we have put to this number.
Great, sir. Thank you for patiently answering all my questions. Wish you the very best.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to please limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Karthik Chulapa from Buena Vista Fund Management. Please go ahead.
Yeah, thank you very much for the opportunity. Good afternoon, sir. My first question is the balance 22 to 23% of your customers who have availed the moratorium in April. Could you share some color on their profile, at least from their business or profession and location point of view? Where is the concentration quite high?
So, good afternoon, Karthik. We have only 2-3 cuts right now available. So, out of 76%, 82% customers was salaried, 73% customers from self-employed category. So 18% customers from salaried background and 27% customers from the self-employed background were there. And as we have the data, customer confirmation and talk, we are hoping that another 8 to 12% of the customer till 31st March and 31st May and will also be able to pay us. Geography-wise, there is not much of difference. We have almost similar experience across the geographies.
Okay, got it. Great. Sir, in one of your opening comments, when you mentioned asset quality, you mentioned a 7% GNPA figure and another figure for one DPD without the dispensation.
So 7% is one day past due number, Karthik.
Okay. This one day past due number of 7% if you did not offer the moratorium.
Yes. If we give the moratorium impact, then it is 2.43.
Okay, without the moratorium. Okay, perfect. And sir, just one data point. What was our employee count at the end of fourth quarter? How much are we planning to add in FY21?
So Karthik, in Ghanshyamji's dimensioning, employee count is 3564. And as you know, we are consistent player. So normally we open 30 to 40 branches every year, and mostly branches are opened in second half of the year. So still we are on the same track. If COVID situation will improve in first quarter, we will go ahead with another 30 branches next year. If COVID situation will not improve, then we will come back to you about the revised strategy around that in second half of the year.
Got it. And sir, what would explain the lower amount of securitization during the quarter? Because I believe the volume was very low relative to the last 2 or 3 quarters of the year.
So, Karthik, we use securitization as one of the source for funding. And as you have seen, our cash and cash equivalent position is very great. And we were hoping ADB money, which is around 450 crore rupees, was supposed to be received in March month, which we got on 30th March. And we got 800 crore rupees sanctioned from NHB. So we have not thought of any further requirement in that quarter for securitization. So that's where last quarter assignment number is less.
Got it. Perfect, sir. I'll come back in the queue for more questions. Wish you and the team good health and wish you all the best, sir. Thank you.
Yeah, thank you. Thank you, Karthik.
Thank you. The next question is from the line of Nischint Chawathe from Kotak Securities. Please go ahead.
Yeah, hi. I know this is a little difficult to answer, but any thoughts that you could share for outlook of the business, for the next, for this year, in terms of, how do you see collections improving over the next couple of months, and, in terms of disbursements, what are you really looking at? And have you done any disbursements in the last?
So, Nischint, from the third lockdown, we have started new disbursements again. And earlier our disbursement rate was 10 crore rupees per day. Now we are doing around 2.5 crore rupees per day. For the outlook of the business for the current year, as a management team, we are well poised that if lockdown will not go beyond first quarter, we will continue the same way we are working in consistent basis in past years.
So any sense in terms of, how do you see collections improving from 76%? I mean, is it like, should we expect normal numbers in June or September, or whatever is your sense on this?
So, Nischint, what I am seeing from my perspective is that right now we are in a situation like demonetization. In demonetization, our one-day past due number used to be 6-7%. It went up to 15% one-day past due during demon period. And within next 2 quarters, we were able to come back to our normal numbers. So I think 76% I've told you anyway. As the lockdown, everybody is hoping to open or getting more relaxed. We are saying that 76% will further improve. So I think it will go again in the range of demand period. And next 2 quarters, if something big has disruption not happened, we are hoping that collection numbers will come down to those levels. Anyway, if you see our NPA numbers, net NPA number is anyway on the balance sheet is only 13 crore rupees as of 31st March. And even if we don't take the moratorium impact, it is 20 crore rupees. So that is not the much size. Our one-day past due numbers are in check. So I think the way we have done underwriting in past years will help us sustaining our asset quality in future, because we have 100% retail book, 95% of the people living in the house which we have funded. Portfolio LTV is around 47%. Even in stress testing and all the COVID impact which we have taken with the consulting of E&Y, their global committee, and everybody's, the number is not significant as you have seen in the balance sheet. So we are hopeful that if things don't go more worse from here, we will be reasonable. Yeah. And anyway, first 2 quarters number will not be impacted because the moratorium will be effective. So published number will be much better than, or maybe as of 31st March numbers only. Better than those numbers.
So, assuming that business comes back on track from, let's say, the third quarter, what kind of a disbursement growth would you be thinking about? Or let me put it this way, that if COVID 2019 would not have happened, what kind of a growth had you budgeted for this year?
Since I always tell that we are consistent player, we always said that we want to have a calibrated growth. Earlier we have given that 3 to 5 years term. At the time of IPO also we have told that we are aspiring for 25% CAGR growth. If the business situation gets normal after Q1, I think we will be near to those numbers this year again.
Just one last question. The 4.4 crore is the entire impact of the exercise that you have done, or is it something that is staggered over 3 quarters and the impact is like 12.5 crores, 13.5 crores?
No, this is the entire effect we have given in the quarter itself.
Sure. Great. Great. Thank you very much, and all the best.
Thank you. A reminder to the participants, please limit your question to 2 at a time. Thank you. The next question is from the line of Abhijit Sakari from Goldman Sachs. Please go ahead.
Good afternoon. Thanks for the opportunity. First question on asset quality. Sir, did I hear it right that additional 12 to 13% of the book has seen repayments in the month of May so far?
Sorry?
Sir, did you say that you've seen additional 12 to 13% of pending repayments in the month of May? Out of the 24% that was on moratorium until the end of April.
April 76%. Yes, I am saying that by 31st May, we can improve the situation based on the customer conversion by 8 to 12% further.
Okay. And from the trends that you've seen in May so far, are customers also repaying the April dues as well, along with the May EMIs?
Yes, they are paying. In fact, I have mentioned one of the interesting fact also that large customers are coming for prepayment in this situation also, because the excess money they are not getting 3-4% more than interest rate in the secured environment. So they are coming with a request that we want to prepay, but if we need the money in next 12 months, please give us that leeway that you will give us top-ups, etc.
Got it. And the last clarification on asset quality is, the COVID provisions, do these assume that the business kind of comes back to normalcy from the month of June? Or what's the assessment on that?
No, so we have fulfilled all guidelines. So as per E&Y ICA guideline, we need to see COVID impact for the entire life on the portfolio, and Ghanshyamji will put more light on this.
Abhijit, I think there is a calculation methodology how much probability of default will increase in next 12 months as well as in the next life of a customers in the stage 2 basically. So as per the India, we have computed that probability of default and whatever amount came, we then over and above 25% management overlay we considered after discussing with the audit committee and the management team to take care of any other staging gap, anything is there basically, and accordingly we have provided that amount.
Okay, sure. I'll take that offline. So second question is on OPEX. You indicated cut down of some discretionary expenses. So could you just guide what kind of expense growth we could be looking at for this year? Thank you.
So, Abhijit, in our cost structure, anyway, around 65% is fixed and 35% is variable according to disbursement numbers that move. And secondly, discretionary expenses are like advertisement, new branch opening, increments for the current year, bonus provisioning. So overall traveling expenses. So I think on the OPEX side, we will have, according to business numbers, we will be able to contain our operating expenses. So operating expenses should not have a negative impact of this COVID or the business slowdown in the performing numbers.
Okay, great. Thanks a lot, sir.
Thank you. The next question is from the line of Kamal Verma from Morgan Stanley. Please go ahead.
Yeah, hi sir. Thank you for this opportunity. If you can share some light on how different states have been performing, let's say Gujarat or Maharashtra, which has been affected more, versus Rajasthan, and more so in May when certain districts were allowed to open up. Thank you.
So, Kamal, I've already answered this question. As far as state-wise verification is there is not much of variance. More, we have consistent performance across the portfolio, across the states for us. In fact, in newer states, the position is better because we have funded more salaried customers. So it has moved in percentage of salaried versus self-employed and the customer profile which we fund. So I've told you 83% of salaried customers have paid and 73% of self-employed customers are funded. So in the newer state, we have more salaried customers, so their performance is much better. In the old states, we have 75-25 ratio. So in that ratio, the performance is there. But there is not a significant difference you can draw between the different state performance because as a company, we have standardized our risk practices, assumptions, and across portfolios, across states, we are mostly in the same performing zone as far as asset quality is there.
Sure. Thanks.
Thank you. The next question is from the line of Yashwant Pachisia from SBC Bank. Please go ahead.
Hi sir. Actually, my question has already been asked by other people. That has already been answered. Thank you.
Thank you. The next question is from the line of Utsav Kokirwar from Investec Capital. Please go ahead.
I have just one question from my side. Just want to know what is the percentage of cash collection in the month of March and April, or absolute amount will be also helpful.
So I don't have a readily available number, but in April there will be hardly, because every collection is digital, there will be hardly less than 1%, because during that time lockdown 2 was there. So last 5-7 days, 150 branches were operating, but we were not able to allow to go into the field. So most 99.9% payment was digital. In March, as we do normally, around 3 to 4% of our total portfolio gets collected in cash. So I think probably that will be their number for the March.
And do you expect this cash collection will improve in the coming months once the lockdown is lifted?
Yeah, as discussion with the customers, since we have the 100% customers talk and their comments and their commitments, according to that talk, we think that this number will be improved. Anyway, I told you March bouncing percentage is better than the April for us. Clearance percentage is better than the March. Bounce percentage is on lower side.
Sure. That's it from my side. Thank you.
Thank you. The next question is from the line of Antariksh Banerjee from ICICI Mutual Fund. Please go ahead.
Yeah, hi sir. Can you hear me?
Yeah.
Yeah. So two things from my side. One is I wanted some qualitative color because you maintain so much data on your customers. How is self-employed class holding up in terms of income? Are their businesses back to normal? Are they earning? And since when are they earning? If they are, some qualitative color on that would be helpful if you have data, and in whatever geography. And the second is, okay, you can answer this.
Yeah. So first, since we maintain so much of data, so the riskiest profile, like I've told you, hospitality and all this, is around 3.4 to 5% in our total portfolio. Second data point is that in March, if we remove moratorium impact, we have 102% collection efficiency. In April, 73% of self-employed customer has paid the money. In May, our clearance percentage is better than the April numbers. So I think the segment which we cater and the kind of appraisal we do and the selection process of risk-based criteria, if we put together all these three numbers, I think that is the rare. Now we anyway operating with 80% of the branches opening up. In those markets, whatever government agencies are allowing, those businesses are start operating. So all mandi and farm related businesses, allied activities, khad, bees, agriculture equipment is on. Essential services, this constitute 32% of the portfolio, is anyway have no impact of lockdown because they are from the very first day. So cash and carry business, medical services, kirana stores, fruit and vegetable vendors, essential services item. So I think all these 5 data points at this point of time, it is looking that these sectors are emerging and they are reviving from this COVID situation. I think we need 1 more month to have the perfect color of each segment, but we are tracking all the 50 profiles which we match, how a particular profile is behaving, what percentage of ratio is there. But maybe you need to visit to Jaipur to see all those things in detail for us.
Sure, that's very good to hear, sir. The second part is on the LAP loans or whatever the non-housing loans. So there we see that the growth is, the YY growth is very strong and it has also gone down sharply. So in terms of number of accounts, it shows more than a 50% growth in terms of number of accounts year-on-year. So what exactly are these loans, sir, in terms of entity? What is the overlap with the home loan customer? For a 6 lakh loan, what does the person do exactly? Can you just throw some light?
So, Antariksh, say if you go by the industry demarcation, we have 83% customer home loan customers. So now, say when we show here 74% home loan customers, so that's 10%, around 3-4% is insurance, fee and etc., which we categorize as per NHB as a non-housing loan, and around 7% is top-up loan to home loan customers for their different requirements. LAP loans are around 16 to 17%, out of which 5% is MSME loans, or most of these loans are MSME loans. Around 7-8% is LAP loans in that category.
Okay. Particularly in the LAP loan, sir, what would be the growth like year-on-year? Is it closer to 40-50%?
What?
In the LAP category, or even in the MSME say, is the growth closer to 40-50%?
No. So, the number of cases wise, what happens, if existing customers, so normally 10 to 12% of the existing customers come for the top-up loans, so the number of accounts gets increased.
Okay. So you give the same customer 2 accounts?
Yeah. So, but we classify that as a non-housing loan, but as an industry, most of the players show them as a housing customer. So, by that definition, our book is 83% home loan and 17% non-home loan.
Okay. Approximately, would you have a data how many home loan customers have taken this top-up loan in terms of number of accounts, or I can get that later? Okay.
Yeah, you can get the data from Himanshu.
Sure. Okay. Thank you so much, sir. I wish you good health.
Thank you. The next question is from the line of Kiran Engineer from Motilal Oswal. Please go ahead.
Yeah. Hi, sir. Congrats on the quarter. I just have one query. I'm referring to slide 26 of your PPT, wherein you've given your liquidity projections for, 1Q, 2Q onwards. And I'm just wondering if, in April, we've had 75% collection efficiency and it's improving in May and June. But if I look at our principal collections, it is still half of what it is in 2Q. So, what am I missing here exactly?
Yeah, you rightly said. These numbers, when we done the March end, we finalized our ALM. We considered conservatively our collections, so that as a liquidity when treasury manage, so that they create enough buffer in the system to meet all operations and payouts basically. Actual collections, what Sushil is saying, those are the actual collections happening in the month of April and May.
Okay, understood. That's all from my end. Thank you, and all the best.
Thank you.
Thank you. The next question is from the line of Bhavik Dave from Nippon India. Please go ahead.
Hi, good evening, sir. I hope you're doing well. Just a question, the interesting fact that you mentioned that customers are prepaying for the fixed deposit, the rates being low. Just wanted to understand what proportion of the customers are, like, out of 100 customers that you have, what proportion of the customers are prepaying the home loans or LAP? I want to understand that.
Yeah, so Bhavik, so we have different categories, but more than a customer, we have anyway very less proportion in our book, which is around 2-3% in terms of number of accounts. Out of that, around 8 to 10% of the customers has come up with this query. Right now, I think around 3-4% customer has already done that prepayment or taken a confirmation from us.
Okay, sir. That's about it. Thank you.
Thank you. The next question is from the line of Dinesh Khanna from IIFL. Please go ahead.
Yeah, congrats on the quarter, sir. Just all my questions are answered. Just one question, clarification. This moratorium figure that you have told, it's by value or is it by the volume, I mean the number of customers?
It's by value.
Value. Okay. And by number of customers or any data point on that? Similar.
So we have 1,05,000 customer and 7,800 crore book. So you can divide that number.
Yeah, it's a similar. There is no difference between the let's say amount of a customer or in that category. There's hardly any differences there.
Got it. Yeah. Thanks a lot.
Thank you. The next question is from the line of Aditya Jain from Citigroup. Please go ahead.
Right, thank you. Just I might ask a clarification. So you mentioned that there are a lot of levers in cost and it would not have an adverse effect on profitability. Is it right to understand that what you mean is that cost to assets should not rise in the year?
This year, na?
Yes.
The coming year.
FY21.
FY21.
Yeah, in fact, the way we have given the trajectory, it should reduce by 25 basis points for this year also.
Got it. And on the assignment, so it has been this low in this quarter, and you mentioned it is one of the tools for liquidity management. So going forward, should we expect that in a period when growth is low, assignment will probably be less, since you will have less need for liquidity?
It will depend on overall bank's relationship, overall funding requirement, and what ultimately, let's say, banks can and offer a price basically. If let's say they offer a very good rate, then other borrowing of a term loans, all these things. So it depends upon overall various scenario, how much assignment will happen in the coming period. But yes, obviously it's one of the funding tool for the company.
Understood. And if you could just clarify, so what is this the usual set of banks to buy? Is it more public sector banks, more private sector banks, or who's the typical buyer?
It's a typical till now with our company, maximum pool buyout happened by the PSU banks.
Understood. Thank you.
Yeah, all large PSU banks.
Got it. And maybe just a quick clarification. So if I'm seeing it right, in 4Q, the disbursements in the non-home loan piece, the non-mortgage piece were quite strong, but those in home loans were low. Is there some operational reasons for that maybe home loan happens more towards the end of the quarter, and so it was affected more by the lockdown?
Yeah, because last 10 days since the lockdown happened and purchase cases, servicer office are not opened. So this is a temporary phenomenon because we lost around 150-200 crore rupees of home loan business because of the lockdown in March.
But this issue did not come up so much in the non-home loan business.
Because home loan you don't need the servicer office, na? And customer property papers are with customer only. And there is only 5% difference.
But there is only 5% difference. Home loan we grown by 13% and non-home loan we grown 18% on quarter.
Quarter on quarter. Yeah. Got it. Okay.
But on full year basis, I think you all have to see non-home loan portion was lower in the beginning basically. So in percentage term, it looks at a higher percentage than the home loan. But now we have a 74-26 ratio between home loan and non-home loan, and including non-home loan include the top-up also basically.
So 83
Yeah. So we are at now as a more or less a standard ratio basically.
Understood. Thank you.
Thank you. The next question from the line of Anirban Sarkar from Principal Mutual Fund. Please go ahead.
Yeah, hi. Thank you, sir, for the opportunity. Just one question. Post the lockdown, have you seen any increase in queries on LAP loans? Because the feedback is that across the sector there has been some kind of increase in queries on unsecured loans, and I'm not sure if the whole same holds true for LAP loans. But have you seen increase in queries for LAP loans from new customers, not from existing customers, but from maybe?
Yeah. So first of all, we don't fund any unsecured loan. Second is, we have a very good amount of queries. In fact, in April month, through digital platform, we have done 186,000 prime sourcing, and this team has logged in around 4,500 new customers with KYC documents. And the trend was normally as was in the past, so 75 or 70% home loan, 30% non-home loan side. Now, since the register offices and etc. are opening up, so housing loan customers are also getting converted more.
Yeah, so the essence of the question was that, are you seeing more queries from new customers? And if so, are you seeing this as an opportunity, or are you being cautious there? I mean, how should we look at this?
No, so I always prefer that we are a consistent player, and we will see the customer queries, yes, with more filters, but we want to be a consistent player in the market, and opportunity. Anyway, we are consistent, so whatever opportunity will come, we will see in a normal way with extra filters on the credit side.
All right. Thank you, sir.
Thank you. The next question is from the line of Saurabh Dhole from Trivantage Capital. Please go ahead.
Yeah. So, good evening. I have two questions. The first one is, if you could give us some kind of sort of flavor on your self-employed borrower segment, because that is the segment which has borne the brunt of the pandemic the most. I know you've already mentioned that industries such as hospitality, which have been impacted, disproportionately form about 3.5 to 5% of the book. But if you could give me some light or some color on what is your assessment of the permanent impact on this particular segment.
That is reflecting in our COVID provisioning and assessment, which the model has reflected.
Okay, fine. And so the second question is, you said that we know that about 27% of the book is mortgage loan. If you could give us a breakup of this book in terms of the type of property that has been mortgaged.
So we do it against self-occupied residential property, so 99% is that.
Okay, and there is no commercial property here.
There can be there, but that will be in addition to his FORP also.
Okay. Thank you, sir.
Thank you. Any other question, Mr. Dhole?
No, I'm done.
Thank you. The next question is from the line of Avinash Dinawde from Dalal & Broacha. Please go ahead.
Thank you for the opportunity, sir. Did I heard right that our disbursement is continuous and we are disbursing around 2 and 2.5 crores per day?
Yeah. So after lockdown 3 stage, we started our disbursement back, and yes, we are at this run rate right now.
So could you share the customer profiles with what kind of customers are applying for the loans? Because most of the peers that we have a discussion with, they are saying buying a home or building a home will be the last thing in people's mind in this uncertain environment. Could you share some light?
Yeah. So I will tell you, in March, our sourcing was total 1,700 crore rupees in a month.
Okay.
And we disbursed around 200 crores. So there was a existing stock of around 500 crore rupees customers which was sanctioned and not disbursed, and home loan. Because anybody who has purchased the property in 10 lakh rupees and already given 3 lakh rupees as OCR, so he needs to complete his transaction.
Right.
That transaction will already happen. Then any customer who has constructed his house and already put the RCC on the casting, so he needs to again complete his house. And then we have normal routine cases of existing customer coming for the top up. Then we have home equity customer also. So based on the existing pipeline and the new customer request, we have the mix as a normal business which we were running. So there is no difference that 100% customer is coming for mortgages or etc. So there is a pipeline already existed with the customer for us. And anyway, in our business, as I told you, we always have a pipeline of sanctioned part disbursement cases of around 300 crore rupees, 8,000 customers. Those customers comes to every month or every second month for the remaining payments as per the construction stages. So I think we have a fairly consistent with lots of pipeline available always for our business. 1 month lockdown, yes, it has impact, but not that kind of impact that business needs to start again.
Okay. And about you say that 150 crores of business loss was during March quarter. So if that add into your overall disbursement, your growth would be around 15%. So in medium to long term, what kind of disbursement growth you are targeting? In near term, there will be some pickup, but medium to long term, what kind of growth you are seeing after?
So we don't see disbursement growth. We see AUM growth. On that side, we have already given the guidance. AUM growth has two aspects. One is new disbursement, one is retaining your existing customers. Even in last year, we have disbursed 2,900 crore plus, and vis-a-vis budget, we have retained 300 crore plus customers. So if you add both those things, even last year, 22% growth is there in terms of our disbursement numbers. So so that's the way we run the business.
Okay. And most of our peers moratorium, the customers are taking a moratorium up to 80%. But in our case, the customers moratorium is taking comparatively lower. What kind of strategies or what kind of motivation we are giving to our customers that they are repaying us, or even our recovery rate has been improved in this quarter, as you say?
It is not the 1 month or 1 day or 1 month strategy. It reflects the kind of underwriting, the kind of processes we adopted while we underwrite those customers. As you know, we are a 100% retail company. We don't fund any land loan. We don't fund any high-ticket loan. We don't fund under-construction builder properties. We don't fund any subsidy projects. We don't fund builder funding. Okay. 95% of our customers living in the house, average ticket size is 9 lakh. We are sourcing around 12,000 files a month, and we are disbursing only 3,000 files. So only 25% cases get cleared on our filtration. Lower LTV on the book. LTV is around 47%. Average FOIR level is around 40%. So all this efforts put together as a business strategy, and then we have a strong collection team, and efforts are there. So I think overall as a business, the concept, the way you do the underwriting, the selection of customer, standardization of processes, makes it what you see in difficult time. The only additional point which we have done, I think, differently is that most of the people, so I told you, as a company, we have talked entire 104,000 customers during this time. So 100% of the customer, if you talk, you make them understand, you assure them that in the difficulty time you are there. I think that makes a great difference vis-a-vis the normal business.
Okay. Just one data point. During demonetization, what kind of credit loss we had, if you have a number with you?
So, till today, in last 10 years, we have total around 7-8 basis point total credit losses in last 10 years journey on a disbursement of 10,600 crore. And demonetization, the number was not different from this.
Hello?
Yeah.
Yes, thank you. That's it from my side. Good luck for future, sir.
Thank you. Thank you very much.
Thank you. The next question is from the line of Kshitiz Prasad from Maybank Chennai. Please go ahead.
Hi, Sushil. Congratulations.
Hi.
Sorry to interrupt you, Mr. Prasad. We cannot hear you very well. Can you please speak on the handset mode?
Can you hear me now? Yeah? Yes?
You're sounding distant. I think you're on speaker.
Just a minute, please. Just hold on, please.
Mr. Prasad, I would request you to rejoin the queue. In the meanwhile, we'll take the next question.
Hello?
Yes, sir. Yes, Mr. Prasad.
Hello?
All right, sir. You may go ahead with your question so we can hear you.
Hello?
Yeah.
All right.
Yeah, please go ahead. Yeah, we are hearing.
Sir, I would request you to rejoin the queue. We'll move to the next question in the meanwhile. The next question is from the line of Saptarshi Chatterjee from Centrum PMS. Please go ahead.
Thank you for the opportunity, sir. My question is pertaining to the question of the participant about the demand of our affordable housing. So I understand that if you have a good pipeline for handling the short-term disbursements, but do you see the risk that in this scenario, when the livelihood of your target customer is can be hampered in a good way, and therefore they may defer their house buying for a longer period, and therefore the affordable housing demand can be a problem for you?
So at this point of time, I am not perceiving that, because I've told you, even in 100% lockdown time, we have 4,000 customers logged in with KYC for the housing demand. This month is better than the April month. So again, it's a retail franchise model where you have 250 branches, 3,500 employees, you cover 1,200 towns, and we don't claim to be 15% of the industry. We are only 0.5% of the industry. So we are there. So I think that kind of demand is already there. And with government putting efforts and incentivization is done, I think the demand will sustain.
Yeah, apart from what Sushil said, I think we are majorly work in tier 2, tier 3, where natural demand is there. In those smaller towns, even despite of COVID, business activity and normal life is not that much impacted what we see in Mumbai, Delhi, and metro cities. Thirdly, I want to say that we have seen migrate labor and the workforce is migrating towards the tier 2, tier 3 small towns. they will stay for some time there, so that consumption in the rural area will get increased. Our main customer segment of kirana store, daily essential items, cash and carry businesses, they will have some better business than what we have seen in earlier. So we don't see per se, yes, there is impact, but we see in the customer class which we feed will have a lesser impact.
Understood, sir. And secondly, how much of our customers will have like our loan as the only loan, and they have other loans also like short-term loans, and therefore is it possible that during this period they are repaying our loans because it's a long tenure house loans and kind of availing moratorium from the other short-term loans, and whenever the moratorium is lifted, maybe they will have difficulty in paying all the loans?
So they do a scrub of our entire portfolio every quarter. As per that, 40% of the customer, we are the only lender. 60% of the customer, apart from our loan, they have some other loans also. We need to take new scrub maybe after lockdown open up. Then we will be able to comment on the situation which you have asked.
Okay, sir. Thank you. Very helpful.
Thank you. The next question is from the line of Kshitish Prasad from Maybank Chennai. Please go ahead.
Yeah. Hi. Just a couple of questions. What I wanted to understand in the broader housing finance market, since we cater to the low income group, and in this conversation you've been saying that that the demand is intact. So from a demographic point of view, do you think that there is demand for credit for housing from these segments which you are talking about? How has been your trend in terms of disbursements, say, only for April? May is too early to say, but April, that has there been a demand? New people are coming to ask for, say, from kirana store or a medical store, or, the kind of clients which you, one. And the second is, overall, the total portfolio which you have on housing, or the total portfolio, outstanding loan, what percentage, maybe I may have missed out, is that the people in value terms have asked for a moratorium? That's it. Thanks.
So first thing, April, we have 186,000 new customer interested, out of which 4,500 customer plus has put with KYC the new loan request. So on the basis of this data, yes, but in April we were not able to disburse much because of the lockdown situation. In the lockdown 3, we have started new disbursements considering the request of these customers. And another question was...
Sir, on the total value of your outstanding loan, moratorium, what percentage roughly people have asked? Is it 5%, 10%? Since most of them are
So I will tell you, as a board approved policy, in March month, whosoever has paid, we will not refund and we will not give them refund.
Okay.
So around 6,000 customers got the moratorium out of 105,000 customers. In April and May, we still need to wait for 31st May, because as per our policy, customer can pay or ask for moratorium till 31st May to us. As I have told you, April already 76% customer has paid, and as the customer interaction has happened with us, more customers are willing to pay if the lockdown opens up from Monday onwards. So exact number of moratorium opt customers we will be able to provide post 31st May.
Okay. And Sushilji, was one more question I wanted to, which means that these 4,500 customers which have been locked in with KYC, you say that, these are the customers who are interested, and probably because of the closure in offices, their disbursement didn't happen, which will happen may happen in May and going forward. So what you are essentially saying, there is demand for low-cost housing in the kind of category which you send. That is what I wanted. Your outlook on that. That's it, please. Thank you.
So there are certain factors which is right now working is like yesterday Finance Minister extended the subsidy guideline for medium MID category.
Yes.
Then the segment in which we operate, ready-built houses inventory is there, and now builders, because of COVID, are ready to tone down their selling prices. So that is also giving the effect. In fact, last 7 days I was talking to my CFO that the ready-built houses demand has certainly picked up because builders are ready to reduce their prices from 10 to 20%. Then third aspect is that natural demand is anyway there. And fourth is, yes, India is there and शादी तो सबकी हो रही है और इंडिया में जन्म परन तीनों टाइम पे आदमी को मकान की जरूरत होती है. जब भी आदमी शादी करता है बच्चों की तो उसको 2 रूम एक्स्ट्रा बनाने होते हैं या वो नए घर में ही अपनी बहू को लेके आता है. So I think because of COVID that has not reduced. So those kind of natural demand will always be there. So I'm giving you a weird, but this is the life and we see it as every day in our in our families also. So when I got married, my father built 2 another rooms. And so same way, it's a natural thing which happens. And nuclearization of the family also extend our demand. So people living in joint family, then they move to for the job to upper towns. In Mumbai, the aspiration increases. So people started from Borivali, then Andheri, then Santa Cruz, then BKC, then Lower Parel. 1 room kitchen to 1 BHK, 1 BHK to 2 BHK, 3 BHK, 4 BHK and bungalow. So those are the natural progression in the life. So those kind of demand creation will always be there.
Okay. And what's your take on the business overall? That you've been around so many years. That this is an unprecedented time for us. So, like overall, what's your take on the business? Not about talking, it's a consumption shock and a supply shock, everything. So, how do you perceive that? It is going to be a different world, and lockdown is going to end soon with a lot of riders. What's your take? That's just your view on that. That's about it.
Last 10 years, every year we have seen some kind of crisis in our life. So certain time RBI guidelines in 2012 when our parent company was there, then vehicle slowdown in 2013-14, and then 2015 got separated from parent, so it was again difficult time whether we will be able to raise money, we will be able to survive. As we got survived 2016 November, demonetization happened. We survived after that. We did the IPO. On the IPO day, market crashed 40%. When we survived out of that, then liquidity crisis happened. After we survived from liquidity crisis, now the COVID is there. So as an organization, I think we are meant for survival. We are conservative. We see survival as the biggest risk, and all our policy, process, strategy, we keep all these kind of scenarios in mind. So I think we are agile for all these kind of situation, and we will survive this COVID situation also confidently and sustainably.
Okay. Thank you very much, Sushilji, and all the very best to you. Yes.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Sushil Kumar Agarwal for closing comments.
Yeah, thank you very much, everybody, for participation. Our entire team is overwhelmed that 402 participants were there on the call. Even after the IPO listing, there were only 200 people. So today, 402 people joined the call. Thank you very much. and for patience listening and your continued interest in Aavas Financiers. To summarize, I will say while the times are tough, but at Aavas we draw comfort from the fact that 100% of our portfolio is secured against mortgages, most of which is self-occupied residential property. Additionally, the portfolio is very granular in terms of customer profiles with average ticket size of sub 1 million. Average LTV is less than 50% on the outstanding amount. We will continue our approach of consistent and sustainable growth by providing credit facility to unserved, underserved customers in semi-urban and rural areas. We will continue to use technology and analytics in much better way in this kind of scenario. We are confident that with our deep understanding of this segment and our in-house execution model, we will be able to fulfill the aspiration of our customer and expectation of our stakeholders. If the lockdown doesn't go beyond first quarter, we are hopeful of delivering the operating metrics of FY21 also. Thank you so much for your time. For any further information, we request you to get in touch with Himanshu in our investor relations team or SDA, our investor relationship advisor. They would be happy to help you. Thank you very much for all your time and attention. Thank you very much.
Thank you. On behalf of Aavas Financiers Limited, we